We are officially at maximum alert. Stop staring at 5-minute charts. Stop obsessing over RSI. Stop letting short-term noise blind you. What is unfolding today, January 6th, 2026, is not a routine correction, not a healthy pullback, and not a buying opportunity on a dip. This is a full-scale financial conflict. And today we received the first undeniable confirmation that the Western front of this conflict has begun to fail. Ladies and gentlemen, this is John A.G. from Currency Archive. For years, we've been the resistance. We were the ones sounding the alarm while everyone else laughed. We warned that silver prices were fabricated, that vaults were emptier than reported, and that banks were sitting on massive naked short positions. We were ridiculed, labeled conspiracy theorists, told silver was a useless pet rock, and that we should stop questioning the system and just buy tech stocks. That ridicule ended today. Today, the opposition didn't hesitate, they folded. And that surrender came from one of the most powerful financial institutions on earth. We need to talk about Bank of America. This is not some fringe player or online commentator. This is one of the largest, most influential, and historically most aggressive precious metals bears in global finance. This is the institution that has spent a decade telling clients to avoid gold and silver at all costs. The same bank that relentlessly shorted metals and dismissed every rally as temporary. This is the Death Star of the market, and this morning it powered down its shields. Bank of America has officially capitulated. Look at what they just published in black and white. For years, they claimed gold was expensive at $2,000. Now, their official average price target sits above $4,500 per ounce, more than double prior highs. That level doesn't just imply upside, it implies a fundamental breakdown of the fiat currency system itself. But they didn't stop there. They also stated that gold should no longer be treated as a speculative hedge. Instead, they now recommend metals make up 20 to 30% of every portfolio. Think about that shift. For decades, banks pushed allocations of 0 to 5%. Moving from 5 to 30% isn't a tweak, it's an emergency maneuver. It's an admission that the remaining 70%, stocks and bonds, is facing existential risk. And if you think the gold call is extreme, wait until you hear what they admitted about silver. This is the smoking gun. Bank of America finally ran the math that independent analysts have been screaming about for years. They studied historical ratios, geological constraints, and supply realities, and admitted silver is wound tight and ready to detonate. They didn't float modest targets. Based on historical ratios, they acknowledged silver valuations far beyond current prices, levels that would obliterate the existing paper structure. Why the sudden reversal? Why now? Not because they care about you, not because they want you to profit. They flipped because they're trapped. They see the same data we see, and they know a catastrophe is approaching that can no longer be concealed. The paper suppression scheme only functions as long as physical metal exists in the background to meet delivery demands. That buffer is gone. In the same report, they quietly admitted the nightmare unfolding on the supply side. Global mining production is shrinking, expected to fall another 2% this year. Costs are exploding, energy, labor, equipment, all rising rapidly. Many mines were barely breaking even at lower prices. At much higher prices, production only begins to make sense. They know prices must rise dramatically just to keep metal flowing, or industrial civilization runs out of silver altogether. This is repositioning. They want to say, we warned you when prices go vertical. This capitulation is the signal we've been waiting for. Every bull market has a moment where the biggest bear stops fighting and starts chasing. That moment is now. There are no sellers left, only empty space above. But Bank of America isn't just looking at charts and mines, they're looking east. Because the real reason physical metal has vanished isn't Western demand, it's China. You cannot understand the panic inside U.S. banks without understanding what just happened in Beijing. While Western media obsesses over rate cuts and decimals, China initiated the largest monetary expansion in human history. This wasn't stimulus. It wasn't infrastructure spending, it was a liquidity detonation. China expanded its M2 money supply by 48 trillion. To put that into perspective, that's roughly double the entire U.S. money supply. Look at what 5 trillion did to the U.S. during COVID. Now multiply that by nearly 10. But here's the difference. When the U.S. prints money, it flows into stocks, derivatives, and financial assets. China isn't doing that. They're converting freshly printed currency directly into hard assets: oil, copper, food, gold, and most aggressively, silver. They're executing the largest asset conversion in history. They're offering freshly printed currency in exchange for metals that took billions of years to form. And the West is foolish enough to accept the trade. This turns China into a gravitational sink for commodities. With unlimited currency, price becomes irrelevant. They care about ounces. If silver rises, they buy more. This creates an infinite bid. This is why premiums are exploding. This is why physical metal is disappearing. China is effectively backing its currency with real resources in real time, while the dollar remains backed by debt. Bank of America saw this number. They ran the models. They realized paper shorts in New York can't stop a $48 trillion bid from Beijing. Every paper ounce sold is met with physical buying, which brings us to the fatal flaw. Western banks are estimated to be net short 4.4 billion ounces of silver. That number is hard to grasp, so let's ground it in reality. Global annual silver production is roughly 800 million ounces. That means banks are short more than 5 times the world's yearly output. In equities, a 20% short is dangerous. At 100%, it's legendary. At 550%, it's suicidal. They sold this silver years ago at $20 and $25, assuming they could always buy it back cheaper. They didn't anticipate China. They didn't anticipate solar demand, and now every dollar silver rises costs them billions. But money isn't the real problem. The real problem is delivery. A short is a promise to deliver metal. In the past, banks could cash settle. But now the counterparties aren't speculators. They're governments, manufacturers, and defense agencies. They need bars, not checks. When delivery is demanded and vaults are empty, the system hits a wall. That's when banks become forced buyers in a market with no sellers. That's how prices go vertical. That's how charts gap. That's how $80 becomes irrelevant overnight, which leads us to the deception unfolding right now. The $80 price is a trap. It's the paper price, an illusion designed to tempt you into selling your physical silver back to the system. But call a dealer. Try to buy at spot. You can't. Real silver is already trading far above paper. That spread proves the market has split in two. Banks are holding paper prices down to lure holders into selling so they can cover. If you sell physical silver at paper prices, you're handing over real wealth for a fake number. This is the final shakeout. When paper markets fail, repricing doesn't happen slowly. It happens instantly. Overnight revaluations, triple-digit moves, that's how commodity squeezes end. Now look at the final constraint, geology. Mine production is falling, silver supply is inelastic, new mines take a decade, ore grades are collapsing. Most silver is a byproduct. If base metal mining slows, silver vanishes. This is a structural deficit that money cannot fix. Bank of America finally accepted this reality. They realized there is no rescue coming, no flood of supply, no exit, so they switched sides. And now it's your turn to decide. Every indicator, financial, geological, geopolitical, is aligned. This isn't speculation anymore. This is execution. The window is closing by the hour. Do not sell. Do not blink. Do not exchange real metal for collapsing paper. If you can still find silver, buy it. Because soon, the question won't be what's the price. It will be, is there any left? The banks have surrendered. China has fired the monetary cannon. Geology has sealed the outcome. Hold the line. Red alert. Target locked. Go.